In investing, we often hear the market analysts talk about the top line and bottom lines of a company or business. Some referring top line to revenue while others said it's sales. And you will also hear company CEO and CFO talk about order, sales, and revenue in their financial report. So it's a bit confusing, right? Well, whether you're a beginner or experienced investor, it's always good to revisit these terminology and know the difference so we can use the information in our investing decision. So today, we're going to talk about the top line. In general, the top line is referring to revenue on the income statements. And because it always appears on top of the income statements as the first line, that's how we get the name as the top line. Well, let me use Google as an example, and I'm going to use seekingalpha.com. As you can see, G-O-O-G, Alphabet Inc. And I'm going to go to financials, which will show the three financial statements, which is the income statements, the balance sheet, and the cash flow. So looking at the income statements, as you can see that the first line that on top appear on the income statements is revenue. Okay, now that's a very important number because if a business is not able to earn revenue or bring in revenue, there's no business, there's no earning, there's no income. All right, so this number revenue is very, very important, and it appears on top. That's why it's called the top line. Okay, not only we want to see a big number, but we want to see it growing year over year. As you can see here on this income statement of Google or Alphabet, it's going from 2017 of $110 billion a year to 136, 161, 182, 257, and this year 2022, well, I should say last year, it would likely finish at about $282 billion. So we can see a very good growth year over year. And if you go down the income statement, as you can see from revenue, right, they take away the cost of revenue, right, that's the gross margin, right, and further they deduct the operating expense and income, including general sales and administration. You will arrive at the operating income. And they further deduct all the others, interest, tax, etc. They will arrive at the net income. And that's become the bottom line at the bottom of the income statement. Okay, so we'll talk about the bottom line in another video. Okay, so that's revenue. But what about sales? Quite often we hear other people or analysts talk about sales and revenue quite interchangeably. Is it acceptable? Well, if it's a general discussion, it's okay. However, from a strict business operation and investing point of view, revenue and sales are quite different, especially when it comes to larger scale of business or long cycle business. In fact, if you read any company reports or financial statements, you would often hear from CFO or CEO talking about order, sales, and revenue. So what are the differences? Well, let me use an example, quite simple example to illustrate this. I think we all have the experience and the pleasure of dining out, right? Going to a nice restaurant and sit down, and our server would come over and present us the menu. Once we have the chance, the opportunity to browse through what's available and the selection, the server will come over to take our order. Now, that's the order, all right, in a restaurant's business. And the server will take the order to the kitchen, while the chef, of course, will prepare the food, right? When all the food are ready, our server will bring our food, whatever we order, to the table, and we look at it and say, yeah, that's what we order. Now, we accepted the order. That become a sale. We're starting to, consume our food, and that become a sale. The restaurants already made the sale. But wait a minute, they haven't collected the money yet, right? We're taking our time to sip through our wine or drink our beer, whatever, having a good conversation and having, the good food or order more dessert, etc., and spend an hour or two, or depending on the occasion, to enjoy our meal. And at the end of the evening or the meal, what do? We get the bill and we settle the bill. That's when the restaurant's getting the revenue. Okay, as you can see, there is a difference, a sequence, and also a time lag between order, sales, and revenue. Okay, now in a restaurant's business, that time period is only a matter of an hour or two. Or maybe in a fast food, just minutes between order, sale, and payment, which is revenue. However, in a larger scale business, especially a long cycle business, for example, Boeing, right? When airline order an airplane, they put in the order, they sign the contract. Quite often, it would take a year or maybe longer for Boeing to deliver the airplane because they also have to order the engine, right? All the parts and components as well. So once they build the plane, tested it, certified, etc., they deliver it to their customer, the airline, which they will cut the invoice that become a sale, right? Once the customer accepted the delivery, it become a sale. However, in such a large transaction, quite often, they haven't collected all the payment. They likely collected a deposit, and they may even have milestone payment schedule. And after delivery, there will be some time, maybe 90 days, maybe 3 months, 6 months down the road, and they will collect the remaining payment. And those become the revenue. So when we read the financial statements, especially the income statement, we will see that there may be a discrepancy between the actual revenue compared to if the company's executive management talking about their sales, and whatever backlog in the factory, as well as, their orders they're taking in. So now we have a better understanding when we hear all those terms or what being discussed by company executive or market analysts, from order, sale to revenue. And for us as investor, it's very important to see the revenue in the book, okay? But we also want to see they are continue to taking in more order and their sustainable growth in all of them, order, sales, and revenue. Now, if you read about a business or a company's order intakes are lower, and you can expect that their future revenue will be lower. And you want to be careful. You want to find out or understand why their orders are lower, right? Means less sales, which will lead to lower revenue. And orders are often not showing up on any financial statements, income statements. So we want to read about it in their annual reports or quarterly reports, right? On the other hand, if their order intakes are growing, increasing, then you can expect that their future revenue down, 1, 2, or several quarters will be higher, right? That's a good news. So that's how we as investor, we want to stay ahead of the game and understand the status currently and in the future, of any business that we are investing in. If you'd like to learn more about investing and understanding, analyzing business as an investor and business owner, well, join my Facebook group, the investor group, with the link below here. And also, we will be hosting a live event, a 1-hour live event on value investing, where we will provide the blueprint or roadmap of a 4-step simple process in value investing. As well, we will provide a checklist of what to do or what not to do in investing. In this live event, I will also be showing a real investment portfolio which outperformed the S&P 500 by more than 35% in 2022. You don't want to miss it, right? So it's on Saturday, January 7th, and the link is underneath here. Go check out on the Facebook group. The detailed agenda and the Zoom link are posted in the group. I hope you enjoyed this video. Please like and share with others. Don't forget to click the notification bell so you won't miss other video. Until next time, take care.